Welcome back. This video, I want to do a short video just talking about the early warning signs of cash flow. And so when going into businesses or organisations, these are a few of the things that I've picked up when working with them that's caused that sort of an early warning sign that they've got cash flow issues or they're heading that way. One of the first things is they don't have a cash flow forecast. So what do I mean by that? That is like having a budget for cash flow as opposed to just a budget for your profit and loss, but predicting your cash flow for the next 1 year, 2 years, 3 years. So some businesses are quite seasonal, and so their cash flow will go up and down. And so if you don't have a cash flow forecast and you're not watching the seasons where you're at, especially for small businesses, that they're getting caught here and they're having to fund their business either by themselves or they're not paying tax payments or they're getting more debt. So it's critical that businesses have a cash flow forecast. The next point, which sort of leads into the cash flow forecast, is they don't know their break-even point. So if a business doesn't know their break-even point, they're not setting revenue goals, sale goals, that they don't know how many sales they need to make each day. But on top of the break-even point, I like to work out a cash flow break-even point, which is a little different from your profit break-even point, because you need, for your cash flow, you can't just break even and you're still going to be fine, because if you've got to make loan payments and that sort of stuff, you've got to actually make more than your break-even point. So over here, so if, just to broaden that, so if your break-even point is say $100,000, so that means you get to the end and you're going to have zero profit. Now, if you're making loan repayments, you might be making, say, $5,000 of loan repayments a year. Then you haven't made enough to cover your loan repayments. And there may be other things in there as well. So you might need to buy an asset of $10,000. You haven't covered enough to cover those sort of things. So it's working out not only your profit break-even point, but your cash flow break-even point. The third thing is when people start discounting because they haven't, because they've got a bit of cash flow problem, or they see their cash flow problem. So the first thing they start doing is discounting. And if the business starts discounting, it's a warning sign that they have a cash flow problem. Fourth thing is debt. Do they have too much debt? Or another thing that they do is they mix their debt with their assets or their expenses. So what I mean by that is you want to match your short-term debt with your short-term expenses and your long-term debt with your long-term expenses. So long-term debt, so it's like 3-5 year, you want to match that with an asset. So if you buy a vehicle and the vehicle is, you're going to have it for 5 years, you want your loan to last 5 years. And however, what some businesses start doing is they get long-term debt and they start paying for things like expenses. So they might start using long-term debt to pay for wages and that sort of thing. And so when businesses start doing that, it's an early warning sign of a cash flow problem. The last one is really for small businesses. And I find small businesses, if they have problems making their BAS payment or their income tax payment at the end of the year, it's a sign that they have a cash flow problem. And they're using the tax office as their bank to fund their business. And if they're using the tax office to fund their business, it means their business is not sustainable from a profit and a cash flow perspective. So this is just 5 early warning signs. There's other things, but these are 5 things that I found when working with businesses. So no cash flow forecast, don't know their break-even point, they're discounting their debt, they've got too much debt, or they're mixing up their debt, or they're finding it hard to make tax payments. Thank you very much.